Good evening, ladies and gentlemen. Welcome back to Walk the Block, where we are attempting to navigate digital finance with our fantastic team here and you, the audience at home. Tonight, we are talking about what a potential crypto strategic reserve looks like for the United States, how it could be implemented, and the probabilities that it's going to happen. On top of that, we just have a quick update on the Federal Reserve meeting happening on Wednesday. So be on the lookout for that and any news events surrounding that. It appears that AI was the talk of the town today, with Nvidia dropping about 17% at the stock open there, but it recovered a little bit. Outside of that, though, we do have some interesting movements in the markets, and we'll be covering all of that with our first panelist tonight, Mr. Agent J. How you doing, buddy?
Doing good, my friend. As you mentioned, we had some interesting movements in the markets today. I went over the details during this afternoon's emergency stream in our Telegram exclusive content section. Short term, we were bearish. I outlined both bullish and bearish scenarios. We just hit the invalidations for my bearish scenario, which means the ball is once again back on the side of the bulls, right? So yes, we did make a move down today, but unfortunately, the bears could not keep the momentum. There's still a bearish case, obviously, but unfortunately for them, we just hit some invalidations on my chart. So I'm sure we're going to discuss a little bit of that when we get into the TA portion of today's stream. But, you know, pretty happy with the price movements, especially if your plan was to dollar cost average a little bit more into some of these assets.
I completely agree. I think it was not a entirely invalidating move that we had recently for the 60-day cycle, but it definitely was a juicy opportunity for sure for the people that caught the wick low, because it's recovered pretty quickly on the day anyways.
Yep.
Alrighty, outside of that, we have another excellent panelist and part of the team. We have Dace. How you doing, my man?
Howdy. I'm good. Look, I unfortunately wasn't able to go live with my friend Jay today. I was kind of busy, but I was very active posting in the Telegram, following all the AI news and all the different campfire stories about what's happening and why. It's been very engaging. You know, there's a lot of interesting stuff to cover. I think ultimately, it's an example of the cycles at play, right? There's a bull cycle, there's a bear cycle, and so it's been fun to watch. Glad to be here.
Absolutely. And last but not least, we have the man behind the mask, Tracker himself. How we doing?
Doing well, guys. Always looking forward to Mondays, man. Always having fun on this show. Yeah, just to tell you, I mean, I think it just goes to show you, the high alpha tech stocks, AI narrative, when things are so baked in and so hot, you cannot leave any room for any bad, even if it's slight negative, because so many things are baked in. So everything's typically priced to have a pullback, and anybody's looking for excuses for a pullback, and that's exactly what you saw today, at least in the tech stocks in that sector, because AI has been running so hot. I mean, anybody who's been in Nvidia for a long time running these AI stocks, you've done very well. Honestly, if you haven't already started DCing out some of those positions already, you're just you're getting very greedy. So I'll put it, but no, all in all, I would say that's probably the best way to put it.
That's fair. I mean, I personally think that my stock theory is different than my crypto theory, which is that crypto operates on the 4-year cycle. So there are built-in dumps as part of the natural cycle. And obviously the business cycle is part of the stock market. But overall, if you find some real winners, it kind of just makes sense to keep adding on to positions and kind of just do the hold and buy and hold forever strategy, in my personal opinion. And that's what I've seen, unless you're trying to do like actually swing trades and maybe like utilizing options to really capitalize and make those changes more exponential, shall we say. But we're a crypto channel, not a stock channel, and I'm very happy to be in the crypto sphere. I don't know about you guys.
Well, it's funny, those dips that people are freaking out on the stock markets. I mean, we see that. Like, we don't even lose. It's like, okay, whatever. 10%, 20%. Okay, normal day in crypto. No big worries. It's like the meme with who is it? I'm drawing a complete blank, but the one where basically like, oh, crypto's gone. It's everything's dropped. It's completely gone. What? It's zero? No, it just dropped really bad. Okay, then we're good. No worries.
It's either that or it's the 3 tiers of people. It's like crypto traders or stock traders when their stock goes down 5%, they're just like sobbing. It's like crypto traders when their crypto goes down 50%, they're like sweating. I think it's like a World War II sub operator meme. And then you just have meme coin traders when their coin goes down 98% and they're just like chilling in the Lambo, just having a good time trying to shake it off. It's like,
Gotta have conviction. Gotta have
That's true. You got to understand the volatility too. That's the other half of it. But yeah, I think Nvidia is down 16.9% on the day. Actually, I saw it. I caught it earlier during my lunch break, and it had recovered a bit. But yeah, overall, not a great day for Nvidia. I think I saw an article saying that Nvidia just recorded the biggest single day loss in history, largely because they were the largest stock that we've pretty much had in history. And now when you have a move like this, yeah, it gets real down there. Anyways, I think that is enough of that. We're going to get going. We're going to cover a quick news segment. Then we're going to jump into the markets, and then we'll get into the meat and potatoes talking about the crypto strategic reserve. So, starting up first, I have a quick reminder for folks. The Federal Reserve is meeting on Wednesday. So we're going to get a juicy, hopefully, press conference with Jerome Powell talking about how the Trump administration is affecting things for the first week, even though we're realistically not going to see any data about the Trump administration, probably for like another month or two, just because the way that the Fed collects data is the inflation data that we got released in January was inflation data for December. So again, we're not going to get a full month of the new administration data until March when we get the February data. So kind of wild to think about, but just remember, coming up here shortly, and right now, the betting markets. This is based off the futures markets, and right now it's looking at a 2.7% chance of a rate cut and a 97.3% chance of no cut. This is actually a little higher chance of cut than I saw it most recently when I checked, probably about a week ago. I want to say it was sitting around like 99% actually. But yeah, we have that. No one's expecting it for this one. But if we look to March, that's where we see that there is a 30% chance of a rate cut coming up then. As regardless, though, I'm expecting no change. I think the market has largely baked this in at this point, so I'm not expecting a huge market reaction on Wednesday. But gentlemen, any takes?
Yeah, look, I think you're right. I don't think that they're going to make a cut, but look to see that percentage chance of a cut raise a little bit. You know, I wouldn't be surprised to see 10, 20%. We've covered these meetings before quite a bit with Teaching Roundtable, and what I would say is the 48, 72 hours before the meeting, you can see some fluctuations. Oftentimes not enough to swing the probability, right? But they're especially given the volatility we've seen in today's market, and like you said, in particularly March's outlook, I think could shift a lot in the next few days too, as we get closer to January's announcement, and then in January's announcement comes out, look for March to shift around at that moment as well. What March does, I think, is largely going to, again, depend upon the sentiment. I'm curious about Powell's words in March, right? Because now Powell will have had a decent amount of time. He'll have had this, not full month, but he'll have had a meeting under his belt already. And so this one is a strange one, and it does make the most sense to not make any big moves because you don't have as much data as you normally have, and you're at the beginning of a new administration. So I think you're right. No changes is what to watch for here.
That's fair.
I think.
Go ahead, Jay.
I was just going to say, I think the chances of the Fed holding the rates where they are, I understand why they're pretty high, right? We did get some pretty bullish news in terms of inflation, right? Even though regular inflation was up slightly, the number that we cared more about, right, which was the core CPI, that our buddy Brendan has been kind of harping on for quite a bit because it's sticky, right? Has finally come down. And so that's important because it's what the Fed really uses to determine the outlook for inflation during the long term, right? Because you're taking out those volatile items from that equation. And so it gives them a much more stable outlook on what potentially could happen long term, right? So that number finally came down. And if we know Jerome Powell, he's not somebody who's going to make any crazy moves just because we had one bullish print. And so I would probably expect them to hold at least for this meeting. And then once they get the numbers for January, then if those things come low, hopefully both in terms of the core CPI and then the regular CPI, then we could possibly hope for the next rate cut during the next meeting, right? But that's really all predicated on what the labor market data shows us, and then what the next CPI print show us, both for regular and for core as well. So them holding the rates as it stands doesn't surprise me. It's well within Jerome Powell's character.
Jay,
That is-
you're not implying that the government actually cherry picks what's involved in how they're going to spend the numbers, are you? I'm totally kidding here. Yes, we do know that they pick which ones they want to show the index, and they get a cherry pick of the 60 in the basket. They got to pick the ones that are going to least look the best. That look the best, basically, the least amount of inflation to be able to show what they want to present. Like you said, Jay, I agree. They're going to be able to go through that, and they'll be able to pick what they want, show the picture they want in January if they get through that. Now, Dave, you hit on a point where I thought was interesting. I'm more curious about how Powell comes out. Does he change at all his stance or how he talks with the new administration? I think that's the bigger caveat takeaway in January in this speech. I'm curious to see how that's going to be, how he's going to come out. I don't expect him to. He's pretty much, I think, a stickler, and he pretty much holds strong, but I'd be curious to see, is there any signs that he's changed his narrative or how he looks at anything based on the administration?
Yeah, look, we did get an announcement that they did have a meeting, right? Jay Powell and Trump.
Potentially.
Right. So it'll be interesting to watch, no doubt.
I like it. I mean, this is probably going to be one of the less interesting Federal Reserve meetings of the year that we get. I think March is where we're gonna see things start to heat up a little bit more, especially because we have data. People are looking at the anticipation of a rate cut starting then. Because remember, we already went from the December meeting. We were talking about having 4 cuts in 2025, and that changed all the way down to 2 cuts. So that's what we're looking at for this year up and coming. And when those cuts happen, I think that's going to be the big question. And then also seeing the inflation data as it comes in. I think Jerome Powell has been pretty dovish, I think is the correct word if I'm not mistaken there, Jay, which is that he feels good about the sentiment of the inflation, even though technically for the year-over-year inflation, they did tick up by 0.1% every time over the last 3 reports. However, it's still under 3%. And I think that if we get better data coming in, we're going to see that potential risk factor for the inflation 2025 start to diminish. And remember, we get the table of report and statistics from predictions or futures outlooks of the Board of Governors, all 17 of them, I want to say. We get that every other Fed meeting. So we're not going to get a new one this meeting, but we will get a new one in March. And that's we'll get the next set of data from them officially.
Is that what they call the dot plot, Zenith?
I believe so.
Okay. Yeah. Right on.
Yeah, that's the one where you see the chart. They have all the dots showing where each of the governors on the board voted on where they think things are going to happen in the future. And
that's where you get that as well. Right.
Exactly.
Right. Cool.
And of course, Trump's he already came out saying he really wants rates to be dropped down a lot. He really wants to be aggressive with it. So it's going to be definitely a pull between him and the Fed just to see. It'd be interesting. I think personally, I think there's going to be more cuts. I think there could potentially be 4 over this year coming up. I don't know. We don't ever know. They could come in and tell them like basically they can't do it. If they do it, it's going to cause more damage. But I get it. It's more of a agile approach. You got to step through this, but then you got to take all your data as it comes in before you can make your decisions. And Powell is a very much data driven person, so it's good. He's going to be more wise to how to take the approach then, regardless of what the administration wants.
The temptation to not mess with the rates has been something that humans have historically been very bad at avoiding, and kind of fallen into the trap a good bit. Obviously, Jerome Powell is going to talk about the neutral rate and where he thinks that he has to keep it, where you're neither promoting unnecessary growth and not trying to cut off unnecessarily inflation cutting off. So Trump obviously is a big business guy. And for the folks at home, you can think about the interest rate is the cost of future money to borrow that money today, or effectively the cost to do business if you were required to take out a loan, which means that if they drop the interest rates, theoretically, it should be easier to operate a business. The downside of that is that it could also spark more inflation because you're overstimulating the economy, so it's just going to run a little too hot. And again, if you just have more money that is created or virtually created through fractional reserve banking, which is what this is targeted at, that doesn't do the same thing as the Fed just printing money or the government printing and spending money, but it has a similar-ish effect in the short run and medium run, which is that you've kind of increased that M2 money supply, so now you have more virtual dollars chasing the same amount of physical goods, and you kind of hope that the economy catches up with that, and that the expansion of the money base allows the expansion of the economy as well to meet up with that, so that you're not just getting runaway inflation. But Yeah, that is what we got. There you go. Your Federal Reserve lesson of the day. For more on that, go check out The Creature from Jekyll Island. It is a long audiobook, but it talks about the history of fractional reserve banking. And more importantly, I think it talks about the 4 kinds of money that we've discovered over the years, which is something gold backed. We have receipts, we have commodities, we have fractional reserve, and we also, yeah, that's pretty much it. Debt, checks, fiat, and barter. There you go. Alrighty.
And correct me if I'm wrong, Z, do we have the summary of economic projections during the March meeting?
Yes, we do. That is the next one that we will get because we just got it in December.
Okay, wonderful. So that means the March meeting is more than likely going to very much determine what Q2 is going to look like, right? Do we get 2 consecutive potentially right translated cycles, right? From this middle of January to middle of March, and then from middle of March all the way into middle of May, right? That's kind of the question that we're positing right now. So if we get a summary of economic projections that, tells us, okay, the Federal Reserve and all of its members, right, all of its chairs are confident that inflation is indeed on continuing its downward trajectory, right? That the labor market, it's where it's supposed to be. If we get that SEP meeting and then their numbers come out pretty dovish, then I think that sets us up for a very successful Q2, not to mention potentially a repeat of what we had in DeFi summer in the bull market of 2021, right? So that Federal Reserve meeting on March will be the one to really keep an eye on, right? Because right now, I think the bulls certainly do have control of the market once again, right? But it's that Federal Reserve meeting in March is really going to determine if we can maintain that bullish momentum, or do we lose some steam and we get that summer lull, that seasonality in the markets that we often tend to have, both in traditional, the traditional financial space, and then obviously in crypto as well.
We'll have to talk about it during the TA segment, but I think that, like you mentioned, the timing of the March Federal Reserve meeting also is very coincidental, I think, with the Bitcoin 60-day cycles, and also the fact that it's almost effectively 60 days after Trump has taken office and is able to implement policies. So we're going to start getting actual data from new administration. It has an interesting lineup where you're like 2/3 of the way through a projected 60-day cycle, and it also has the ability to actually allow for the administration to make some changes and hopefully start jogging the economy in certain directions, or at least get their policy priorities going. I would be surprised that if we did not at least see an attempt at passing a bill through Congress that is a large part of the Trump administration plan within the first 60 days, because, 100 days comes up quick. And the administration so far is showing that it's willing to act very fast, which, as someone that worked at the speed of government for a long time, I'm very happy to see this. But that's a little bit more for later on. Other than that, though, gentlemen, any final thoughts on the Federal Reserve?
No, sir.
Very well. Alrighty.
In March, because I think a lot of people are also looking to take profits.
Sorry, Tracker, you were cutting out there at the end. We
You were
missed
in
you.
and out, my friend. We didn't get the beginning
sorry,
of your talk,
guys.
and then we
You
lost
guys hear
at
me
the
now?
end.
Yes, we
Hear me now?
can.
Yep.
All right, sorry about that. Yeah, just to piggyback on that. So I think, in March and April is going to be an interesting time because, like, remember, a lot of people are talking about taking profits in March and April, but like you said, it's going to be that's the time that everybody put on their calendar, because that's when you're really going to be paying close attention. Because even if you get a run up, people could be looking to take profits at that point. Or even if things are going down, do people not take profits even though they were? There's a lot that's going to happen there. It's going to be a lot of data coming out. It's the end of Q1. I know, Jay, you've highlighted a lot. I know you guys here have all highlighted that area, but I think the end of Q1, beginning of Q2 is definitely a very interesting time where we could see a major pivot. Not to say that the bull run would be over, but a major pivot. So everyone needs to be high alert for that time.
Agreed. Right. Mr. Agent J, are you ready to pull up some charts and talk about TA?
Yes, sir.
A lot to talk
Absolutely.
about when it comes to Bitcoin in particular.
Yeah, well, you know what? I'm not going to go too heavily into the weeds, right? We are going to go over the local structure and the local timeframes. However, if you want the more deep analysis of the current price action, we went over it during DRT yesterday, right? And then we also went into a very deep dive during today's Telegram exclusive stream. So if you would like to see that in more detail, then you are certainly welcome to jump into our Telegram channel and then consume the content at your leisure. All right, so let me go ahead and share my screen really quickly.
Perfect. While we're getting set up, I do want to give a quick shout out to two excellent folks that we know and love around these parts. First up, Moonpill Rational Optics jumping in here first. He says, fire, a crypto stream a day keeps getting wrecked away. Well said, sir. And then outside of that, we also have fan favorite Centurion54X. He says, good evening, amigos. Good to see you, sir. Hope you're doing very, very well. And we had one more sneaking in here. Kevin now saying, will the housing market be any part of the rise of the rise for Bitcoin? That is an interesting question. I personally think that the housing market it follows similar effect patterns, but they do not drive each other, which is that the cost of housing is not going to cause the rise of Bitcoin. And at the same time, I don't know if the rise of Bitcoin will cause the rise in housing. But what is an interesting note is that it's a lot of luxuries and commodities that we saw the similar price trending like we saw back in 2020, 2021, which is that when the cost of borrowing money goes down and inflation goes up, things that are a store of value or things that have some sort of scarcity or restriction on them, those are the things that run in price. So that is why we saw them run in tandem previously, and I think that we've seen them run somewhat in tandem in past. But realistically, the price of housing didn't really go ballistic until 2020, and then it was a very steady rise ever since the bottoming out of the 2008 financial markets. But during that time, that was when we had the creation of Bitcoin, and we saw Bitcoin start to do all of its runs. So that's my 2 cents on it. They don't cause each other to run, but there is a reason if they run at the same time.
Mm-hmm. Yep, absolutely. They don't have a direct causal effect on each other. Kevin is my father-in-law, by the way. He's been asking a lot of questions about Bitcoin because his guy Trump is in office and he talks about Bitcoin. So thank you for joining us, Kevin. So there is not a causal relationship as to whether they like Bitcoin does not cause housing market prices to fluctuate, and the housing market doesn't cause the prices of Bitcoin to fluctuate. However, there are certain variables to consider. For example, monetary policy. We're talking about the Federal Reserve. The monetary policy will have a significant effect on both housing prices, and then also they're going to have a significant effect on Bitcoin prices as well. So even though both items don't affect each other directly, there are things that exist above them that affect them together, right? If that makes sense, Kevin. So hopefully that clarifies some of that, right? Like, aside from monetary policy, inflation, right? Inflation also has an effect on the housing market and also has an effect on Bitcoin, right? So there are several variables that affect both of them together, but they don't affect each other in any way whatsoever, at least not that I'm aware of.
Yeah, I agree. I think the right way to think about it is that they're both outputs, right? That are the results of many inputs, right? Whether it's financial policy, inflation data, macro sentiment, they both respond to both of those. They respond to the same list of things, but they don't act on each other directly, would be how I would try to boil it down.
And just to add, the housing market always has tended to be a lagging indicator with the overall traditional markets. Traditional markets tend to roll over before housing markets. Housing markets move and they form a cusp, and then they start to roll over at a very slow snail's pace. I mean, real estate investors have a huge advantage because they already see all the red flags coming up, or the canaries in the coal mine screaming at them, time to start unwinding properties or get out at this time. Same like when it bottoms out and starts coming back up again. Now, during COVID in 2020, that really threw a wrench in the entire housing market because the fact that it had been so suppressed, but not naturally suppressed. It was because people couldn't go out, couldn't buy houses. So there's this pent up demand that started to come to fruition. And that's why you saw people just paying anything for houses, because there was this pent up demand that wasn't natural. Due to the result of the lockdowns. So that's another thing. I think it's finally kind of got flushed out. Now you're going to see the housing market go through its traditional setup. So watch for the housing market to always be a lagging indicator of overall markets.
It's true. And Kevin, we also have an answer from a good friend of ours who's not on the show with us tonight, but we do like him a lot. And that is none other than Mr. Angry Twinkie. He said, I will speculate somewhat. Yes, as people increasingly recognize Bitcoin as an absorb value of everything kind of asset, So, to have a shot at buying a house in the future and to preserve the value of his labor, Twinkie here is saving in Bitcoin in order to use it to buy a house later on. There you go. Another one of our crypto friends. He does excellent work, I have to say. And he's a professional as well. He's not just he's not one of the crypto bros out here. He's got a real day job too, I promise you.
Well, to add to that, Zenith, sorry, go ahead.
I was just going to really quickly mention, I'll see if I can find it and drop it in Telegram. I saw a cool infographic. Had a picture of the same house 4 times. One was in like 2004, 2014, 2024, and then I think I said 1994.
This
and
is
it
a picture
priced
of heartbreak.
It priced it in dollars, it priced it in gold, and it priced it in Bitcoin. It's all the same house, right? And it's amazing to see what time has done to each of those assets as they move against each other.
Now, I was going to say it'd be interesting to see if they try to roll Bitcoin or any of these cryptos into the ability to rotate profits or anything into property, because if that could translate into property, then you could then rotate those gains into housing like you can under a trust, where you can sell property, not pay gains, rotate that into the next property. Now, if they come out with something like that, 100% Bitcoin would have to be correlated to the real estate market, because it's actually attached and it's a tax haven. So it's something like that were to change in regulation, absolutely.
The one major difference that I see that really separates the housing market from all the stuff that we've been talking about, though, is that the housing market has a liquidity issue, which is that not everyone is trying to buy the same exact houses everywhere. Granted, there are national trends, there are like comparables that you can have when buying houses, but a lot of it is location. A lot of it is the individual houses that you are buying themselves. But when it comes to something like Bitcoin, it's like a Bitcoin in El Salvador is just the same as a Bitcoin in the United States. So I agree with you. I think that what you're going to tend to see is you're going to see like the luxury markets will probably get real hot when Bitcoin does. Property might follow a little bit, but again, I think just the speed of which that housing moves and also the speed of which new housing is built is also drastically slowed down over the last few years. And there really is a housing shortage right now that has not been solved in the last few years. So because of that factor, I wouldn't be surprised if we did see housing prices do jump, but it's going to be due to a lack of supply, not due to a pumping of everything else. Cool. Alrighty, Mr. Kevin, I hope we answered your questions. Thank you for prodding us. We always love talking about this kind of stuff. We do it behind the scenes anyways. We're just happy to do it on stream with people that care like you. So, all right. Thank you, everyone out in the chats, for putting your questions in. If you have any more, please continue to do so. Outside of that, though, it is time to talk about some charts. So, Jay, what do we got?
Yes, sir. So on the 4-hour chart here, just observing the local structure as a refresher for people, we are looking for the completion of our Y in large degree, right? Which would finish our wave 4. So we're going to go over the bearish scenario first, right? And the one distinction that I do want to make, and I repeated this during the Telegram call and then yesterday as well, is that unfortunately for the bears, even if we're looking at the bearish scenario, right, you're still looking at taking the all-time highs, right? Because the Y structure that we are observing here is a flat, a 3-wave structure in A, a 3-wave structure in B, and then a 3-wave structure in C to complete your Y, right? And within the subdegree, right, the orange B, you're looking for another 5, 3, 5 move to complete, right? The question that we tried to answer earlier was that, is this B in purple, right? Is this B in a lower degree already in? And I made the argument earlier that it actually was not yet currently in, because we did not hit some bearish invalidations at the current time that we were discussing the charts over here. So let's go ahead and get down to the 15-minute chart, right? Here's the scenario that we were taking a look at, right? In order to finish this B in purple, right, we were looking for a zigzag down, which means we're looking for a 5-wave move to the downside. All right, a 5-wave move here, 3, and then 5-wave move to the downside once again, right? The bearish invalidation that we were looking for was this one right here, right? Taking this count into consideration, we were looking at your 5 not yet to be in. This was, give me a second here. Let me take this away for a minute. Earlier, we were considering this to be the 3, and we were looking for our wave 4 to be in somewhere over here, right? This is what the structure looked like earlier during the stream when we were talking about it. And we were saying, because the wave 4 did not hit our invalidation here at 102,432, then on the balance of probabilities, it was much more likely that we were going to take the low, right? Over here at, what was this, 97,800, give or take some change, and actually make a newer low. However, over the course of the last few hours, we did hit the invalidation, which is the 618 for your wave 4. I mentioned that I was not going to be interested in any bullish scenario in the short term unless we hit that 618 level, and we just did do that a little bit less than 2 hours. Bless you, sir. Bless you. And so that bearish scenario has been invalidated. And so our new count looks something like this. The 1 and 2 does not change. Your 3 is here. Your 4 is here, right? Your 3 still coincides with the most amount of volume during that move down. And then finally, your wave 5 is here to finish our B wave in purple, right? B wave in that lower degree. And so the next move that we're looking for here for both the bears and the bulls, right, is continuation of the trend to the upside, taking the all-time high. And in the bearish case, right, that would complete the C in purple, right, lower degree, which would complete your B wave in lower degree before we eventually move to the downside and potentially take our take the $89,000 low that we made earlier during the month for that C wave in orange, right? Which would finish that move, which would also finish your Y in red, which would finally finish your wave 4. The only difference, right? The only difference for the bulls is, so that's your bearish scenario. The only difference for the bulls is as follows. Where is my bullish impulse? Here we go. The only difference for the bulls is that you, instead of labeling this as an A and this as a B, this is your 1 and your 2 in lower degree. And you're looking for continuation to the upside. Meaning this price here, this 97,500 plus change, is the lowest we are going to get for the bears before continuation to the upside in 3, 4, then 5, right? Still looking towards new all-time highs. So the only question that we were asking earlier was that, were we going to get lower prices in the short term for the bears? Well, because we just hit that bearish invalidation, that means the bulls once again have control of the market. And unless we hit, right, our 886 here at 90,978, I am not interested in any extreme bearish scenario. The only thing that would make me reconsider is if we take this low here, which currently, as it stands, doesn't seem likely. But if we do take this low here at 97,750, that's when I'm going to become a little bit more interested in alternative counts. However, because of the structure, because of the bearish invalidation that we hit, that's 618, I am once again leaning much more towards the bullish scenario for both the short term and the long term, right? Again, this is one of those times where I always tell people the structure dictates everything, right? Your invalidations dictate everything. And just because I was bearish earlier doesn't mean that I can't flip if the chart tells me otherwise and the chart told me otherwise. So once again, I am bullish, right? I am not shy about telling people that I can flip on a dime when the chart tells me it's time to flip.
I like it. Yeah. The only other stuff I would have to add to that one is that I focus on the moving averages a little bit more. And one of the things that I saw was that we dropped and we tested below our 20-day moving average and our 50-day moving average. Those are short and medium term indicators that I use. And seeing a wick below that is interesting because it shows that we're not treating them quite as supports. It depends on how we continue to treat them and what that the overall effect that has on price. But as of right now, our long-term indicators still show we're still very bullish because we're well above our 200-day moving average indicator. This is my very long-term average indicator showing that the overall trend. So this one in particular, back in August through October, we were below it. And if you're in a bull market, you're typically not below that. So that was definitely a time of anomaly. And if you look at the charts, that was actually a pretty good time to be accumulating Bitcoin, because we had that crazy run up towards our new all-time highs once we got about pretty much about 6 months past the halvening, because that's October. That would be the 10th month. We had our halvening in April 19th. So that would be about here. I think we were about 64,000. And then after that, we came back down, tested 64K twice, and then we're off to the races. So there you go. Outside of that, though, looking over at some other coins in the space, Ethereum had another wick. Didn't get, this one's been looking a lot more bearish lately, pretty much for the last month and a half-ish. Again, our moving average indicators here, we have our 20 below our 50, which shows that we've had localized downwards trajectory, and the price reflects as such. However, we have not really gone below our 200-day moving average, except for a small part of the wick that we had for the end of the 60-day cycle previously. So Ethereum looks like it's respecting that 3,000 level pretty well. If we break down below that, we can see price break back down, and maybe even go touch around this like 2,700 area, or if we get real wild, we could maybe even see like $2,500 or $2,400 Ethereum again before making another run up. Outside of that, though, let's take a look at Solana.
I was gonna make a joke. That red line, the 200 on Ethereum, was like, it was straight horizontal. I mean, it's like, it's just
yeah,
stuff.
That is a very unique situation, seeing that kind of thing right there, because we were above it for a while, we were below it for a while, back above it, and the net result is that you get a very flat line, which says that our long-term average right now is that we were chopping sideways, and Ethereum has largely done that ever since Bitcoin made its all-time highs back in March of 2024. So that is an excellent observation. Solana having a little bit similar story to Bitcoin, which is that we came down, tested the 20-day moving average. Apologize, different colors on this one. But our 20, 50, and 200, this is actually our 111. Let me change that real quick. Yep. Similar. It's a lot closer to Bitcoin than it is Ethereum. Solana has been the darling of this cycle so far, and Ethereum has been having its third cycle curse. So the price and the charts reflect just as such. And if anything, I think Solana is looking pretty good. And yeah, this candle right here, this nice big green one, that was caused purely by the Trump meme coin launch on Solana, because a lot of people flocked to it, and it was one of the biggest launches in crypto history, effectively. So there you go.
Certainly was. No slouch.
Question on Solana: what's the transaction rate? Like, what's the transaction? Like, how much does it cost to do an actual transaction?
Pennies.
Let's go find out.
Cool. So you got pennies on Solana, and you got still what's the Ethereum gas at right now, Huguay? I mean, so that's the big killer for Ethereum. So you can actively trade memes on Solana. It's a bigger network, got more participants in it. You can do a lot more meme trading in there. But the pennies, like small guys can do it. Ethereum, you can't do so much hot trading unless you're a whale, because it's just, you'll get chewed up in costs.
Look at the wick to the downside, fill in the green candle gap there from the whole gap up Trump. I mean, it filled the whole way, basically. That's wild.
Of course, of course, just for the audience, I mean, I'm sure most people know, but of course, at the same time, they've been selling the Trump coin, the administration. And what's the foundation that's behind it? That's selling they're taking profits from the meme, which is okay, and rotating it into Ethereum. So.
Among other tokens, not just Ethereum.
Yep. What other coins have they been rotating in besides Ethereum?
Chainlink, Aave, ETH.
Are they buying Sui? I know Junior's affiliated with Sui. I don't think they're buying.
Sui. I have to check.
Sounds like to me
Ethereum, Aave, Chainlink are the top three. I have to double check.
Okay.
Let me check my X account and see if I can't pull it up.
Okay, but what I'm hearing is very large
large caps
that have been around a while, that actually have big, solid communities. And Chainlink's is not a bad one. It's not. And of course, Ethereum, it's been a lagger. It's the second largest one, has smart contracts, huge. Why that one? That's interesting.
Okay. ETH, Chainlink, Aave.
Aave or Avalanche?
Ave, no Avalanche, Ave, because I think World Liberty Financial is a fork of Ave. I have to double check that. Tron out of
Tron.
come on, Donald
Are you
Trump.
serious? Tron.
What happened? What
So
happened?
for
What
the
happened
people
to
not in
America
the
only,
know,
man?
Tron
What
is
happened
a
to America
Chinese-dominated
only, bro?
blockchain.
Oh my goodness, what is going on?
If you do not speak Chinese, there's a good chance that you probably do not know what's going on with Tron. So there's a great irony to that.
Yeah, somebody needs to get in his ear on that one because that man. What are they buying that for? Okay, what else you got, Jay? Is that it?
And Athena.
Hmm.
Mm-hmm.
What are the percentages? Does it give you roughly equal distribution? Okay.
From what I saw, I think predominantly a lot of that was going through ETH, but whenever they were posting the chunks of buys, right?
Yeah.
It was always distributed in equal portions, like 47 million here, 47 million here, 47 million here, in equal distributions. But we got more news that ETH was being bought in like there was a bigger bias towards ETH.
Okay.
Do you get the joke, Jay? They distributed it in 47 million chunks.
Yes, because it's he's 47th. It's like the man knows how to have fun when he's doing stuff.
He does.
Yeah.
All right. Do we have any final thoughts that we want to cover? Dace, we got something pulling up here.
I have their portfolio. I have World Liberty Financial portfolio here. If you want to look at it real quick.
Let's take a look.
Ethereum total invested this is the column, right? They've got way more Ethereum than anything else. Wrap Bitcoin is you swap, it's Bitcoin on Ethereum. And then
that's an interesting one. That's the one. Hold on, I'm sorry to interrupt you, Dave, but that's a very interesting one. The second largest holding is wrapped Bitcoin on Ethereum, not Bitcoin, but wrapped Bitcoin on Ethereum. That's the one that's kind of like it's interesting. It's almost like we're okay with Bitcoin. We're just going to get it wrapped on the Ethereum. It's just an interesting one. Sorry,
so I know that lots of people pair, right? That will liquidity provide between ETH and wrapped Bitcoin. That's a common play for bigger wallets. Something to think about too. They're still sitting on a decent amount of dry powder. We like to call it $50 million in powder left to deploy. There's your $10 million in Tron. That's wild. And then a couple of other coins, and that rounds out the list. The recent transaction, I believe they bought, I don't know where, this is not showing what I saw earlier. Anyway, yeah, I thought that was interesting. Anyway, moving forward.
No, great info. And I guess as a final note, one of the things I just was looking at is if you take a look at the generalized structure, Bitcoin structure looks more flat. The Ethereum structure looks more downwards. There's a big spike going down. And then if you start looking and comparing them, Solana also has a slightly different structure, but it's largely closer to Bitcoin, which is we had a high, we had a new all-time high after our wick low, and largely it's a flattened to the side. And then we have, I believe it was Chainlink, largely to the side, slightly down. Then we had Aave, which is flat to the right mostly. And then we had some other ones like Cardano, flat, AVAX closer to Ethereum, Dot closer to Ethereum, and let's take a look. Tron, well, I think this one's a bit of an outlier personally, but looks closer to Ethereum as well. And then Sui has been a bit of an outlier as well. This one looks like it's more of a unique chart on its own, but we're actually getting an interesting thing happening here, which is our 20-day moving average is about to drop below our 50-day moving average. Those crossover events are usually interesting points. So that's what I'm looking at. It's like we have a lot of the market that's either really pumping hard on its own. It either follows Bitcoin and Solana, or it follows Ethereum, in which case it's really lagging. So a lot of the Ethereum-based stuff is lagging right now and shares that same structure.
As we scrolled through these, I was just looking at just the sheer how far above the 200, right? How far above your bottom trend line are we right now in what is conventionally considered a bull run? And that tells you the tale for sure. I like your moving averages a lot, Tina.
Sure does. Right. Let's see. We got Kevin and Twinkie are still talking to the chat. Kevin did ask, when do we think Bitcoin can be used to buy things like cars and homes in the future? I believe Tesla did accept it at one point. I don't think they're doing it anymore. But honestly, you just need more mass adoption, and we're just not there yet.
Well,
There
let me
actually
say
have been
this.
purchases in Bitcoin on housing real estate. There's actually already been some moves on that.
Yeah,
Well,
but sorry, go for it.
no, I just was going to quickly say the proper home lender will entertain your crypto assets for the purposes of collateral towards your home. Doesn't mean you can send them Bitcoin from your address. But in terms of a lender valuing your holdings towards qualifying you for a loan, that is certainly possible. Absolutely.
True. I think if you can find folks that are willing to operate in that, you have found a unique individual who's giving you a great opportunity. But at the same time, understand the volatility, the volatile nature of the assets, and understand which side of the volatility you're on at the current moment. That's what I'd say on that one. All right, I think it is about time we get to our meat and potatoes of the evening. So, with that being said, let's go right to our source material from the desk of the President of the United States. We have an executive order from January 23rd, 2025. You might think this looks familiar if you were watching the Sunday show, which you should, because we covered it there. But this is the executive order specifically called Strengthening American Leadership in Digital Finance Technology. And yes, this is the crypto executive order. The number one thing that it does is that it tries to promote the United States leadership in digital assets and financial technology while protecting economic liberty. We have a series of proposals. They're more of just like broad statement applicability things like protecting self-custody rights of digital assets, trying to have better defined jurisdictional regulatory boundaries, and even doing things like trying to ensure that CBDCs will never be a thing at the federal level. But the thing that we want to talk about today is the elusive, what used to be thought of as the Bitcoin Reserve. But now what we have is that the president will be forming a working group, and they shall propose a federal regulatory framework covering the issuance. Do I have the right one here? Nope, that's stablecoins. Here we go. The working group shall evaluate the potential creation and maintenance of a national digital asset stockpile and propose criteria for establishing such a stockpile, potentially derived from cryptocurrencies lawfully seized by the federal government through its law enforcement efforts. There you go, gentlemen. There it is, the fabled Bitcoin Reserve from the office of the president. What do you think?
The first thing that jumps out, so they're proposing that cryptocurrencies lawful seized by so anything that's been seized by the federal government would get thrown into this stockpile. So is that basically what we were talking about last week with the Silk Road confiscation of the Bitcoin, right? So
Exactly.
that tees it right up right there. So you already got a big pile of Bitcoin sitting there. That's one that's a good that I'd see absolutely falling right into this. Then the other, of course, we've seen all in the chats and people are getting a little pissed off. Like the Bitcoin people are pretty upset because they're labeling this digital asset stockpile instead of Bitcoin, of course. Bitcoin people wanted a Bitcoin reserve. They're not happy it's being labeled this because they know that's going to involve other crypto, not just Bitcoin. And then, of course, the XRP armies with Ripple's got involved in this, which they're upset because they think it should only be that. So I think no matter what you do, there's going to be some people happy, some people mad. I like the way that they took the approach calling it just digital assets. And then that gives them time to kind of iron out what is the best approach to go forward. But certainly Bitcoin will absolutely be involved in this because they're already sitting on how much Bitcoin already?
About 250K, you know?
Yes, according to Bitbo,
Yep.
the USA is sitting on about 207,000.
Right. So that's a nice starter pack right there.
I've seen the figures go all the way up to like 220,000 Bitcoin. It depends on. They have to track it through the wallets, and then you have to ask yourself, is this a string of numbers? Do I actually have verification that this is attached to the U.S. government? And that's where you can get the fluctuation in numbers. But the average number I've seen is that it's just a hair above 200,000 Bitcoin, not dollars, but number of Bitcoin. So that translates to about, quick math says that's about $2 billion. Fair enough. You know, Tracker, you mentioned something, which is that the language in the executive order just says crypto
Stockpile.
Thank you. Digital asset stockpile. There is a notable group of people who also caught that language and have a little bit of a problem with that. And that would be the Bitcoin maxis themselves. So traditionally, up until this point, when anyone has ever talked about creating a crypto reserve, it's always been Bitcoin because that's been the leader of the market. But now that we have this stockpile order without very specifically calling out individual cryptocurrencies, I think a lot of people are speculating that this leaves the door open for interpretation, and it might be on purpose, because it seems that a lot of the talk around the current industry as it is right now is that they're trying to bring cryptocurrency back to the United States. There's talk about capital gains breaks for it, and there's talk about trying to ensure that the regulatory environment is not hostile to these things. And this might be a little out there, but what if one of the incentives to get people back here is that the U.S. government will declare that they're going to start purchasing up some amount of U.S.-based cryptocurrencies for their stockpile?
Well, I think ultimately the way that they label it, I mean, you don't ever want to paint yourself in a corner and then have to backtrack out of it, right? So by them labeling a digital asset stockpile, it leaves it wide open. It's vague enough to, like that article said, it's vague enough. You want it to be vague. That's why they did it that way. You don't want to paint yourself into saying we're only going to go this way or that way. Have time to digest it and let the committee really iron this out on what's the best path forward. I mean, there's no need to be make any rash decisions real quickly. You've already laid out this. We know it's coming. It's just what is it going to be? Let them figure it out.
Yep.
True.
I think this is on purpose. I know there was speculation that when Trump appeared at Bitcoin Nashville middle of last year that he forgot his speech, and so when he was talking about the reserve, he said stockpile instead because he forgot it. Look, you have to analyze Trump from the lens of a businessman. Right. I think that's why he's been pretty successful as president, is because he's treating America like a business and he wants America to win. The language surrounding this particular item is not a coincidence, right? The reason why he used stockpile, or they use stockpile, is precisely because of the reason that Zenith laid out, right? The goal of this administration, when it comes to digital assets, in particular crypto, is to bring over the businesses that we lost during the 4-year term of Joe Biden and Gary Gensler. That is the ultimate goal. And the reason, yes, the Bitcoin maxis are going to be upset over this, but if you singled out Bitcoin, right, then all of the other companies don't have an in, right? All of the other assets don't have an in. But because you said digital asset stockpile, right? Digital asset is a very large umbrella. Now you give other companies an in. And it is well in line with what he's been discussing about no capital gains tax for assets created here in the United States. If you're not a company that created your asset here in the United States, you still have an in. We're going to create a process for you to bring your business here. And so this language is very specific. It's not coincidental. It's because he wants to bring as many of these founders, these companies, and their money over back into the United States. Okay, so if you're a Bitcoin maxi, I'm sorry. I know that you're a little bit butthurt at the moment, but I spoke about this on DRT yesterday. All right, let's show a little bit of gratitude, because all of the stuff that we got over the past 7 days could be nothing if there was somebody else sitting in the Oval Office. So a bit of gratitude goes a long way. It really does.
That is very fair. At the same time, though, I understand why the expectation was for Bitcoin to be the one to do it. Real quick, we have here from the desk of Cynthia Loomis, a senator for the state of Wyoming. This is actually from July 31st, 2024. This was a bill that she proposed for the Bitcoin Act to establish a strategic Bitcoin reserve as an additional store of value to bolster America's balance sheet and ensure transparent management of Bitcoin holdings for the federal government. Specifically in this one, she actually calls out an expansion of the holdings all the way up to 1 million unit Bitcoin purchase program over about 5 years. What that comes out to is that will be about 5% of the total Bitcoin supply once the final Bitcoin is mined in, I want to say the year is 2140. So right now, I want to say that our supply is sitting at about 19.8 million. That is where we're at out of the possible 21 million. So there's not a whole lot more that are going to get minted through the actual minting process of the miners validating the network. But what we're talking about here is that if we go look at the actual text of the bill, this is the one that was proposed in the 118th session of Congress, but it didn't really get off the ground anywhere. I will say, reading, it's only 13 pages long. It's not that bad of a read. And to be honest, a lot of the language here actually, it seems pretty crypto knowledgeable, because it even uses words like airdrop to talk about some stuff, and even cold storage, forks. So the language in the bill does give me hope that the people that wrote the bill know what they're talking about. But some of the big ones are talking about pretty much just using shall establish a decentralized network of secure Bitcoin storage facilities distributed across the United States, collectively known as the Strategic Bitcoin Reserve for the cold storage of government Bitcoin holdings. Talks about decentralization, location selection, even security measures. But one of the big things is down here, which is that Section 5, Bitcoin Purchase Program. The Secretary shall establish a Bitcoin purchase program which shall purchase not more than 200,000 Bitcoins per year over a 5-year period for a total acquisition of 1 million Bitcoins. Conduct purchases in a transparent and strategic manner to minimize market disruption and hold Bitcoin acquired under this section in the trust for the United States as provided below. And they even get more specific with it, which is that they have a minimum holding period as well, which is that to ensure the long-term stability and security of the Strategic Bitcoin Reserve, the Secretary shall hold all Bitcoin acquired through the Bitcoin Purchase Program for not less than 20 years. I don't want to try to...
Long time, man.
Long time to hold, man.
Yeah, so... There is an actual term that we use to describe when things are locked up on chain, whether it's actually through code or just a promise not to do things, and that would be total value locked. What is the significance of locking value on a chain? What does that do to prospective buyers?
I think it makes prospective buyers bullish.
It does. It gives them confidence is what I think it does.
Right? Remember we went over this during a live stream on our Sunday episode where we spoke about that one company who were, I think they were dealing with real estate, and that one of the terms and conditions for them including Bitcoin in that particular deal was that the Bitcoin was going to be held in escrow for a minimum of 4 years, right? So they can't it was a way for them to help back the loan that they were giving to their potential clients, right? And so this reminds me of that slightly, but in way better, because if you're going to buy the Bitcoin and you're saying that this has to be held a minimum of 20 years, that's a very long time, right? That's basically double the amount of time that Bitcoin has been in existence, right? Because we're going on 15 years now, so a little bit less than a double, right? But that's 4-year cycles. I think you're going to give a lot of people who are investing in this asset great confidence that if the goal of the United States is to hold at least a minimum of 5% of the total supply, that 5% of the total supply is not going to be dumped if they were able to accumulate it in that kind of speed. There will not be any selling pressure for 5% of the total supply until 20 years. Right. So I think that's bullish. I think that's not a difficult concept for people to understand. Right. Bitcoin has a finite supply. You're going to buy 5% of it. You're going to hold it for the minimum of 20 years. So no selling pressure from the US government for a minimum of 20 years. That's bullish.
When you think about the audience of folks who maybe are new to crypto, who don't have any exposure or understanding, and they hear that the US government is holding it, they hear people compare it to gold, and then they see that the government's committing to hold this stuff. They're going out of their way to hold it for 20 years. I think that will convey a very strong message to folks who are not familiar with the space, and hopefully, have large interest in preserving their wealth because they got plenty of wealth. I could very easily see that happening, right? You could pitch it as, this is the US's digital Fort Knox. I could absolutely see trading firms, hedge fund managers, bankers using that rhetoric once these things are sort of in stone and moving forward into and look, this in tandem with the rule about banks being able to hold crypto as assets, not liabilities, right? That's going to incentivize the banks to point to this and be like, look, the government's doing it. We offer it. Come get on board,
Agreed. And to your point, one of the things you can point to in this proposed legislation is that they have recommendations after the holding period. Down to Section B, recommendation. Upon the expiration of the minimum holding period, 20 years, the Secretary shall not recommend selling more than 10% of the assets of the Strategic Bitcoin Reserve during any 2-year period. So that's also saying This is dump prevention as well. So there's built-in security on both ends of it, which is steady buildup and a hold period. And then at the tail end of that, also saying, look, we're not going to dump it on your head like maybe, I don't know, the Ethereum Foundation or something. But if we are going to sell off these assets to help facilitate the strength of the dollar, this is how it's going to be done. These are the limits. And of course, we also have public reporting. So 1 year after the date of this enactment and annually thereafter for a period of 20 years, Secretary should publish an annual report on the status of the Bitcoin purchases. So they'll also tell you how you're doing it.
I like it. I like it. I like a lot that it's, I know the Bitcoin maxis are upset that it's not Bitcoin only, but I like everything about this.
That is true. And then we do actually have one more thing I would like to share. And that is, we have a small video from Cointelegraph. We've covered what a Bitcoin strategic reserve could look like. So I want to cover real quick, how likely is this to get implemented as it was pitched? This video is about a month old, so it is not up to date with the executive order. However, it was tracking the legislation and some of the possible options. Notably, this video did come out after the Trump election, so it does take that into consideration. Please let me know if you cannot hear it, but I do believe that we are good to go. Let's do it.
Reserve. So how realistic is the scenario of a Bitcoin reserve being adopted by the United States? At the time of recording, Polymarket shows a 24% chance that the US will establish a Bitcoin reserve under Trump's presidency. Given that Republicans control the House of Representatives, the Senate, and the White House, there's a strong chance the Bitcoin bill could pass quickly. Loomis is optimistic. She believes the bill could be approved within the first 100 days of Trump's presidency. However, there is an alternative route. Analysts at the Bitcoin Policy Institute have proposed that the US Treasury could purchase Bitcoin through the Exchange Stabilization Fund. This fund is designed to stabilize the US dollar and does not require congressional approval. By using this mechanism, the Treasury could expedite the process of building a Bitcoin reserve, bypassing potential political delays. So what could this move mean for Bitcoin's price? Mike
Alrighty, we'll give it a quick pause there. But if you caught what he just said, that was actually a key point that I don't think a lot of people have been pointing out right now, which is that there technically is a route, if Trump wanted to, via existing legislation and executive order, could use the thing called the Exchange Stabilization Fund, which was specifically set up to allow the purchase of things to help stabilize the US dollar, including gold and other securities. Now, the thing with this one is that it might be playing a little loose and fast with the definition of securities and other kind of like wealth generating assets, but it does point out this legislation does already exist. It's on the books and it is possible to use, assuming that you have favorable interpretation from the regulating authorities as well. Any thoughts on that one?
I think so. As far as if he can order the reserve,
not order the reserve itself, but can use the existing Exchange Stabilization Fund to already make some purchases. Not one of the ways they talk about this actually is they say that it's not that you were specifically purchasing cryptocurrencies like Bitcoin and whatnot, but it does have the ability to purchase things that can be utilized for such purposes and other securities, like a Bitcoin mining company. I don't know if there's a big one out there. There's this thing called MicroStrategies run by Michael Saylor. I don't know if the government can specifically pick and choose individual stocks, but if they theoretically had the desire to invest in, I don't know, an ETF of Bitcoin miners, which does exist, by the way, that would be, if you can make the case that it is there to help stabilize the US dollar, I think there's a reasonable case, but at the same time, it's not going to be the size of the Bitcoin reserve that I think people are hoping for. But the point of me bringing up this part of that video is to point out this sort of thing is already in motion. The existing, creating a new strategic Bitcoin reserve is actually not that crazy of an idea if you compare it to the previous stuff. It really actually seems like a logical progression, which is that we've been using other various things over the years to protect the stability of the United States dollar, whether it's through mechanics over at the Federal Reserve or through the purchase of assets that used to back up the US dollar like gold. These things are historically and canonically, like, they happen. And it's for the purpose of backing up the US dollar.
Yeah,
Bitcoin
I think
strategic reserve, same thing.
I think it's certainly possible. Zenith, is it probable? You're going to have. Obviously, I'm on the side that it's more probable, right? Especially because we have the Congress, we have the Senate, and we have the White House. Now, you're going to have to convince people that you do want something to back up the US dollar that is finite in supply, that is immutable, and that you can't manipulate, right? We know what happened when gold was that item that was backing up the US dollar, right? And it took it away. So you're going to have to convince, again, collectively, everybody in the government that this is like, we should probably go back to something like we had with gold. And we have something that's even better than gold, right? Because we know that gold has a finite supply? It's difficult to find, sure, right? But we don't know if it has a finite supply. We know that Bitcoin has a finite supply. We know that the blockchain is immutable. We know that nobody can come in there and manipulate this and do something nefarious with it. And even in the past, when we had those inflation bugs in Bitcoin, right? All we had to do was fork the damn thing and roll the chain back, right? We have that capability, right? And so, is it possible? Yes. Is it probable? Going by how they treated gold, I say not. But again, right? Times have changed, and it seems like our representatives are much more willing to pivot into Bitcoin than, well, at least than they were 10 years ago, right? So I am certainly hopeful.
Agreed. And sorry, I'm responding to Centurion 54X. He said, so that cycle when the government's Bitcoin is unlocked is going to be interesting. I pointed out that according to the math, you can't sell, the government by its own rules here would be able to sell more than 100,000 Bitcoin over a 2-year period. Granted, it's a lot, but if you remember, Germany actually procedurally sold off 50K Bitcoin earlier in the summer of 2024. And that was one of the things that caused a wick low for 60-day cycles. Outside of that, though, back to the issue at hand, though. I mean, I think that the Bitcoin Strategic Reserve has kind of just been almost willed into existence by like the zeitgeist of the American public at this point. And based on the current political winds, I see the likelihood of it happening are very, very high. Now, with that being said, I do want to ask you, gentlemen, about the effect of a potential strategic reserve of this magnitude. So, the data that we have to go off as of right now, we can try to crunch numbers if it was the proposed legislation, which looks like it might not be. But if we go off the proposed legislation of effectively purchasing 800,000 Bitcoin over the course of 4 to 5 years, well, theoretically, we can crunch those numbers. So with that being said, I did do some homework, and I want to present you, gentlemen, with some stats real quick. So we have live Coin Watch. Live CoinWatch has Bitcoin liquidity currently at $1.673 billion. I've seen this fluctuate over the last 72 hours all the way up to about 1.9 billion. But if you do the math on this, it actually comes out to about 16,700 Bitcoin are publicly available in liquidity pools for purchase at this moment. You might notice that is a lot smaller of a number than the idea of purchasing about 200,000 Bitcoins over a single year. Granted, if that kind of pressure is applied, there might be more people willing to sell to capitalize on some profits, or maybe just hold and keep driving the price up. And that's where I brought up another stat that I want to share, which is that the Bitcoin exchange balance on centralized exchanges right now is about 2.1 million Bitcoin. So the green area of this chart is the actual Bitcoin on exchanges as of now. So you can see that as we get further into this cycle, it's gone down and we're sitting at about 2.1. But all the way back in January of 2024, it was sitting at about 2.7 million. So granted, the liquidity pools as they stand right now are a lot smaller, But the reason that we focus on liquidity is because liquidity pools are the things that determine price. We do take into consideration the overall market cap, but at the same time, if you can dry up the liquidity pools, that is going to be something that really spikes the price up. So the question is, which of these figures is more realistic for trying to figure out the effect of that size of Bitcoin purchase?
If we're going to go by central exchange liquidity, if their plan is to buy the remaining 800,000 over the course of the next 5 years, right? Depending on how aggressive they are with their buys and how much they spread it out, it could have a major impact on price immediately, or it could have a very negligible effect on price because Michael Saylor buys billions of dollars worth of Bitcoin every single week, right? Doesn't really tend to affect price that much, right? But if you were to buy that Bitcoin in one large lump sum, right? And as you just displayed there, the exchange reserves for Bitcoin are very, very, very low, right? Then that can certainly affect price. But again, that's going to be very much determined by the schedule at which they implement this, right? And how much they buy at a time. I don't think they're going to buy 800,000 Bitcoin in one large lump sum. I think that's probably going to be spread out evenly, maybe quarterly. I think they're probably going to do it quarterly. That seems the most sensible thing to me, right? To make their buys quarterly. So if that's the case, I don't think that affects price in any significant manner. But the news itself of this thing being implemented will be bullish for price because people are going to front run this particular case.
Once a quarter, it's going to come out. Oh, look, and we're going to bang the drum, talk about how the government's buying more. That I think that will affect the price more than their actual buy pressure, right?
It'll be the same thing like they come out how they say we're going to buy bonds or buy any assets that's backed. They're going to come out. They're going to tell you when they're going to buy it. They're going to tell you what's happening, but they're going to accumulate it. Quick question is, I'm assuming they're going to go through central exchange, somebody like Coinbase to handle all the overhead. Could be somebody else. I couldn't imagine the government having its own wallet and them buying directly for off. I couldn't imagine that. So they're probably going to go through central exchange to handle all this, or it could be a BlackRock or a Grayscale. Could be somebody like that handling it. But what it will do is it'll keep building a floor. The floor will keep going up over Bitcoin. So yeah, could you get in there and front run, make the profits, sell when the activity is? Because that's the beautiful thing about on-chain transparency. When it's going to come, what's going to happen. You can sell when the actions are occurring. You can see all who's making those moves. But I think you'll be able to front run it. You will have ups, you'll have downs, but ultimately it'll just keep moving that floor up, because if they can't sell for 20 years, I mean, they can't dump. And how many did you say? 800,000?
Mm-hmm. The goal is
if you include the 200,000 they're sitting on right now, then yeah, at minimum, that's another like 750,000 Bitcoin.
Yeah, so just to do the quick, the 650, you said 650,000 more, even at $100,000 price tag right now. I mean, that's 75 billion. Now, does that sound like a lot? It's a lot, but in the grand scheme of the United States, that's nothing. Now, will they still cause that price to go up? Sure. So they'll buy some now. They'll keep buying it up as it goes up. Maybe that's what it would take to have cryptocurrencies and Bitcoin to finally decorrelate from the market. That would be fantastic to see. That would be wonderful.
I'm going to give you guys a little pushback real quick. So I think it's going to be less easy to front run this if this actually goes into effect, just because of the usual mechanisms that the U.S. government does for purchasing, especially large purchases. So when it comes to federal acquisitions, I would not be surprised if they actually, this might sound stupid or crazy, but if they actually try to prioritize OTC or over-the-counter deals via a federal acquisition program where they try to do contracts and bids for large-scale purchases of Bitcoin. So what you would see is that they'd put out a proposal saying, we are looking to purchase 50,000 Bitcoin here in this contract, and they'll farm it out to anyone willing to try and participate in the contract. And they'll say, look, if you have 50,000 Bitcoin you're willing to sell us, we're willing to hear your asking price for it. And then the government will compete all your bids and then choose the winner based off that. That is a traditional model for how the government does make some of these large-scale purchases. So I would not be surprised if we saw that. And we also see it OTC, which is that they're probably not going to be going right through liquidity pools, but it's absolutely undeniable the effect that purchases of this size will have on the overall market. Just because you're not trying to suck 50,000 Bitcoin through a liquidity pool that only has 16,000 Bitcoins in it doesn't mean that larger players in the space are going to be willing to try to fight for these contracts and be willing to get their price demanded.
Okay.
Yeah,
that's.
Go ahead, Jay.
Tell me I'm crazy. Go for it.
That's a fair assessment. However, the roadblock that I'm coming up against your argument is at least the OTC argument is if they find out that the US is going to buy 800,000 Bitcoin, who's going to sell them 50,000?
Coinbase over 6-month increments, but if they secure maybe something like a 4 or 5 year contract,
BlackRock, maybe
BlackRock.
Sure, like assuming that Coinbase is willing to part with their Bitcoin, assuming that BlackRock is willing to part with their Bitcoin, right? That's a big assumption, right?
That is fair.
Coinbase and entities like BlackRock are willing to part with their Bitcoin OTC to the U.S. government because, like, I'm considering this from an investor standpoint. If I know that the big guy, that the U.S. government is buying Bitcoin, that's not bullish for Bitcoin. Why would I want to part with my damn Bitcoin?
Well,
Why
hear
am I
me
going
out.
to give it to you, U.S. government, if I'm a sovereign entity, if I'm a country? Why would I give it to you, bro?
All right.
Why?
Here's why you might want to do that. You may want to actually sell that because you're able to dump a large amount of your profits. You could go ahead and sell a good chunk that then allows you to liquidate because you feel like, I don't know, maybe you see the 4-year cycles coming, you know what's coming or brewing. Just saying, it gives you an opportunity for whales to unload a massive amount and not worry about slippage and those kind of problems. Okay, so that would allow you to do that. And on top of that, maybe there's certain deals going on in the background you don't know about. Maybe it is, hey, I'll sell you this much, but in return, you're going to, maybe look a blind eye for regulation on us for doing other things. You know what I'm saying? I mean, I'm not saying, am I crazy to talk like that? I don't
That
think
rabbit
so.
hole has no ending, bro.
It doesn't have any ending.
Come on, man.
So what I'm saying is you have opportunities here to quote unquote help the government in by loading up their cryptocurrency in exchange for unloading your profits, loading that in, but it does put a floor in, and you could still come back and still dollar cost average when prices come back down on a pullback. You can still do that and then turn around and resell it again back to the government. So the government is this backstop that allows you to unload large amounts to make it easy for you without slippage. And I think it's a tool. It's just another tool that the large whales and institutions can leverage now to unwind certain trades or positionings that they're trying to do. Maybe they have a massive amount of taxes they got to pay. Maybe they work out a deal with the government to sell this, and in return they get 2-for-1 deal on what taxes they owe. I don't know. I mean, there's all types of things that could come out of this.
I am still going to maintain the opinion that, look, you make a very compelling argument, right? Because selling it OTC is definitely a good way to lock in gains. Obviously, hey, turn a blind eye here, or give it, like, we'll say this minute, like that's all that stuff is reasonable, right? The U.S. government is not. Let's just say they're not immune to making those kinds of deals, right?
They don't have a track record of batting 1,000.
Yeah. However, that's, again, 800,000 Bitcoin is a lot of Bitcoin, right? You're either going to have to procure that from small players, because the people who have already amassed that kind of Bitcoin, they're not so willing to part with it, right? Like El Salvador, Singapore, right? Hong Kong, Bhutan, they are not willing. They're not going to be as willing to part with their Bitcoin as maybe the average Joe and Jane, because they see this, right? There's a reason why other nations and sovereign entities are accumulating Bitcoin and making this their strategic Bitcoin reserve, is because they see it as a way out. Why would you give away your out? Right?
That's fair.
Jay, I'm bullish on that. I'm bullish on it regardless. I mean, it's going to keep raising the level. Now, in the short term, you could unload and you could do a little tighter trades, like maybe every quarter or 6-month time horizons, you'll get better prices to get in at, and then over a period of time, sell it to the government to lock in some of those capital gains. Because, the big guys are always chasing, they have to entertain their customers. They have to show, have they outperformed everybody else. So it's another tool that they could do. Overall, it would still cause prices to rise, but still goes back to what I was thinking about, how they were building this digital asset Stockpile, how they were talking about seizing. So that's the thing that catches my eye, that makes me really concerned, because they're about seizing. Now you're talking about, and they've just labeled cartels, terrorists basically. So I mean, now you got this open pendulum to where they could start seizing that stuff, move it into stockpiles. I'm not trying to scare people, but then now you got the whole reason why the IRS is expanding. They're trying to make the IRS so large. So it starts to paint a little picture here where they could certainly go after and seize certain things, because they have this shiny new thing out there that's floating everywhere. They can start grabbing it and start stockpiling it. That's probably the more sinister side of it that would concern me. How much of a power reach does it become?
Tracker, I think you are presenting a good and healthy fear, especially considering back in, what was it, the 60s, they tried to make private ownership of gold illegal when they
That was in the 20s or 30s. It was in the 20s or 30s. They made it illegal to own gold back then.
I will say, I know it's not confirmed legislation. It didn't even make it out of the House. But the final section of the bill that was proposed did actually talk about this exact same thing. So protection of private property rights. Nothing in this act shall be construed to authorize the federal government to seize, confiscate, or otherwise impair any property right in the lawfully acquired Bitcoin holdings of any person, or infringe upon the rights of individuals, businesses, or organizations to purchase, hold, transfer, or dispose of Bitcoin in accordance with the law. So there is a little caveat. People are aware of exactly what we're talking about, but at the same time, like Jay alluded to earlier, the government is not perfect by any stretch of the imagination. So trying to make sure that all the loopholes are not wide open, that's definitely something that's gonna have to happen. As far as the Bitcoin that's currently in the possession of the government, I think that's pretty well established or case shut, so to speak, which is that those are people that, I mean, you got to admit that if the U.S. government got the hold of crypto, it was willingly given to them, because you can't pry the 12 C words out of someone's brain just yet anyways. So you got to like do some sort of deal with the Justice Department or something, be like, hey, if you cooperate with us and you actually transfer these seized assets, we will credit it to you, and that will be taken into consideration for the prosecution or whatever. But yeah, I hear you. Believe me, I hear you. I'm also healthily skeptical of the government trying to seize stuff too.
And Zenith, I know you're a historian. I know you. I'm just trying to put a little bit of context for everybody in there. So basically, Franklin D. Roosevelt signed Executive Order 6102 in 1930, making it illegal to own gold. All citizens were required to give your gold coins, bullions, and certificates to the Federal Reserve by May 1st of 1933. And then that ban was not lifted until 1974 under President Gerald Ford. So that's a long time. That was a long time. So I'm just saying it's interesting. Is it too far-fetched? No, absolutely not. And history has proven that it's been done many times. So that's always in the back of people's minds, that's that trust factor that people always have an issue with the government. It sounds great, but then you look at the other caveats. Okay, this could be abused if they wanted to abuse it. That's the big concern.
Fair enough. Gentlemen, have we beaten this one up pretty good? How do we feel?
Yeah, we beat this one. Yeah.
Fair enough. There you go. The only final. Go for it.
The final thing to say on this. Look, I think the details are less important, right? What the schedule of buying is, how much they're going to buy at a time. I think that's less important. I think the goal here is to actually implement it, right? Because once this thing is implemented, then you start the dominoes falling one after the other, because people will front run this. Remember all of the bearish scenarios that we've had over the last in 2024. Whenever we found out that the Germany was selling 50,000 Bitcoin, look how much that moved price, right? Generally 50,000 Bitcoin being liquidated shouldn't move price that much, but you get people scared. They start selling, right? Strike prices are hit for the longs. They get liquidated. That pushes price down further down. Right? There's that cascade of dominoes that falls one after the other, after the other, after the other, that is preceded by this kind of big news, right? In this case, we were talking about bearish news with Germany selling 50,000 Bitcoin. Now we have, whoa, the US government is now actually really finally not just talking about it, not just kind of sort of, but really for sure, it's on paper. Donald Trump penned it and it was signed off for everybody. They're going to buy 800,000 Bitcoin over the course of 4 to 5 years. Okay, front run time, because it's for sure happening, right? It's not a maybe anymore. So I think the amount and the time is less important, right? The amount they're buying and the time course which they're buying it, that's less important than the actual, all right, here's the executive order saying we're going to implement the reserve and we're going to start buying.
Yeah, it's hard to disagree with anything you just said there. I think this topic is a gold mine, which is that we've now kind of like even expanded the Pandora's box a little bit, because I think the inevitability of something like this happening is become higher and higher probability. And now with the way that they issued the executive order, and then with the way they're talking about bringing crypto back to the United States, it's even opening it up further to saying, oh, we were only talking about Bitcoin at the beginning. This could be many different things now, and trying to figure out what it is without actually seeing anything proposed. Until we get something proposed, we're all just speculating, and there are so many different ways you could take this.
Zenith, and I'll support Jay on this one. If it happens, it's going to be a giga pump across the world because guess what's happening? All the other countries out there are going to be like, "Oh crap, United States is doing this. We got to get in line because maybe they know something we don't know with U.S. dollars." So it's going to be an absolute euphoric, or it's almost going to be a run on the Bitcoin or a run on cryptocurrencies.
I was
That's the
about
best
to
way to put
say it's the U.S. government declaring there's another gold rush, right? But it's online. It's not in California. It's not in the west of the U.S. It's everywhere. Yeah, I agree. I think it will inspire some sense of mania, no doubt.
When people say that we're still early, it's stuff like this that gives me hope and reason to believe that, yeah, we are still early. That time might short be running out soon once the world governments get in on it. But as of right now, January 27th, 2025, I do still think we're still early.
Yeah, agreed.
Fair enough. All right, gentlemen, we will call it there for the evening, just like Kevin also called it there. He said, thanks, catch you next time. Kevin, thanks for showing up. Thanks for all the great comments as well. And thanks to everyone else out there, like Moonpilled Rational Optics and our other friend, Centurion 54X. Outside of that, though, folks, we have one final thing that we would like to present with you this evening, which is that, please, if you have a chance, go check out the website. It is walktheblockndf.com. This is where we're going to be posting a lot of the updates coming in the future. And while you're over there, go ahead and check out our Twitter page. We are walktheblockndf. That is the handle. We post all of our show going live stuff over here. So stay up to date with everything we're doing over there and any articles or items that we post between the shows, between the Telegram calls. All that can be found over there. But that is what we got for this evening. We'll catch you guys next week on Monday. But until then, I just want to go around the horn one final time and ask everyone, where can we find you? What are you looking forward to? And what do you got going on in the future? Mr. Agent J, let's start with you, sir.
As always, you could find me in the Telegram chat for DGen Roundtable. You can also find me on Twitter or X at _P90Hex, Instagram at agent_J Schroth. But if you want to get a hold of me and actually talk crypto, you will find me in our Telegram, the DGen Roundtable Telegram chat. That's where I spend most of my time. That's where I produce most of the content exclusively for the Telegram. What am I looking forward to? We got Whiskey Wednesday tomorrow. We got the Federal Reserve tomorrow. And for Whiskey Wednesday, we're actually not drinking. We're talking about anime. So that should be exciting. So I'm certainly looking forward to that one tomorrow. So Dace, how about you, brother?
Yeah, look, you can also find me over there at the DGen Roundtable Telegram. I host Telegram Tuesdays along with my friend here, Agent J. You can find both of us together. Tracker pops in there plenty. Zenith comes in when he's able, but me and Agent J are on there most of the time, every Tuesday at 1 p.m. Central. You can find me on Instagram and also on x.com with this handle at Dace Northall on both platforms. And yeah, look, I'm here for the ride, man. Every day there's something new to cover. I also try my best to sort of post things in Telegram as news updates come out, as we all do here in the group. And so find me there.
Love to hear it. Tracker, what about you, sir?
You guys can find me here, Walk the Block, on Monday nights, 8 p.m. Eastern. You can also see in Telegram Tuesday, like Dace and Jay have already stated. And those are during the day, so if you guys are in the daytime, you can catch us. We're also in the main chat rooms for the DGen Roundtable, so you can catch us there. At the same time, I'm excited about the time we're living in. This is an interesting time. I mean, you are seeing a major disruption. I think technology has changed and revamped so many things around the world. You think about what the smartphone and some of these other technologies have done to change the world, and we're just starting to get going heavily in the financial sector, which is the one area that really has not been revamped heavily. So this is interesting times. Yeah, just excited.
Agreed. I think that we've started 2025 with a bang, and I personally think 2025 is only going to get even more hot. Like, if you thought the market's hot right now, you ain't seen nothing yet. 2025, it's going to get white hot towards, probably in my personal opinion, the end of the summer, maybe fall time. That's what I'm looking at. So at the same time, I've been saying it before and I'll keep saying it. Beware of the euphoria. It's going to come. People are going to get wild. People are going to start talking about Bitcoin going to $1 million. And then Jim Cramer's going to get out there and make a tweet and ruin it for all of us. But that's just how these things work. And I mean, I'm here for the ride, and I'm hoping to stick to the strategy myself. Outside of that, though, I have probably 14 more episodes of Neon Genesis Evangelion to listen to watch before Wednesday. I already got through 6 yesterday, and I have to go defend all my hot takes against Agent J over there at the Degen Roundtable. We are absolutely building over here at Walk the Block. We're trying to get a lot of stuff set up behind the scenes for you guys so we can start transitioning everything over here and getting everything going over here and have that nice professional white glove service to help everyone get in, get updated, and stay up to speed with all of their research and everything they got going on. Outside of that, though, folks, I'm Zenith. You can find me on Instagram and Twitter, primarily at ZenithDI. RH Max coined that for me. That stands for Distinguished Investor. I had to take it. Zenith was taken. Shocker. But yeah, that's what we got. Outside of that, though, if you like what we talked about here today with the executive orders, go check out RH Max's channel. I did a stream over there with a lawyer friend of mine. We talked about the executive order, potential implications for everything going on when it comes to the SEC, current lawsuits. I think it was a fantastic stream, and I'm always happy to plug the boys that help plug us. So check out RH Max. He's a homie. Outside of that, though, folks, thank you so much for tuning in tonight. Please do us a big favor. Do all the YouTube pleasantries. Like, comment, subscribe. And if you're on a replay gang, definitely comment because we love seeing what you guys like picking out from here. Share too. Yeah, all that stuff. We really appreciate each and everything that you guys help us out with. And we also try to hope, and we're hoping that we are helping you out as well. So with that being said, until we catch you guys next Monday for the next episode of the live stream, I hope that everyone has a great, great week. And until then, good night.